All right, everyone. Well, it looks like I got my microphone issues straightened out. I've actually been hunched over my desk for the last couple of days. Anyway, I won't get into all the computer issues. You know how I get along with technology, so we'll just dive right in. For some reason, last night I just couldn't sleep, and so I came in and I was looking at the marketplace, and I did a double take with this huge move down in essentially the London Open. I was up about 1:30 my time, which is pegging it around 8 o'clock in the morning in Britain. And so the British pound had a very fast move down right near the open. And this ties right in with what we've been talking about over the last couple of days in terms of positioning and picking the right points to get into the market. And we'll go ahead and put the time on here. So you can see that hour ended at 2:22 p.m. Did I just say put the arrow on here? Oh, I need to take a break. Okay, so right near the open, you have a very large bar. In fact, this bar from top to bottom takes out, call it 9-10 hours prior. For all of you engineer types, that equals big. Okay. At that point, and again, this is the crucial part in the equation, because this is happening at the open of the day, we need to start paying more attention. We also need to start looking for an opportunity to catch a reversal. This is the sneak attack. So we're looking for the 1.272 retracement in order to wait for the market to go up. Now, I'll let you in on a little secret. If you don't want to wait for the Fibonacci, or you don't want to draw the Fibonacci, as the market is moving down, here's the big secret. It's the 3-bar reversal. And the reason why we look for the 3-bar reversal is because the 3-bar reversal is what will demonstrate, if you will, that the market is getting ready to reverse. And that actually kicked in right down here. Let me zoom. So let's squeeze this together. We'll zoom in a little bit more. There we go. And so you can see the market pulled into a 3-bar reversal pattern right in here. It gave us a trigger right on that level. Well, really right in that level here. And then it started to pull up. Now, depending on how large, remember our hourly bar up here and how big it was, depending on how large that is, you may see a little dipper here. The larger the first move, in fact here where you have an hourly bar that from here to here takes out 10 hours worth of trading, that reversal down here is going to get tested. And you can see that here. The market comes right back down and then boom, takes off again. In fact, it gave it another test here coming into New York, and you had an even bigger move to the upside. So two very easy to find entries. One more aggressive entry there if anyone was paying attention. So what's the moral of the story here? The moral of the story is you got to learn the market. You have to learn how the market trades, what's behind the market trading, how these professional traders think, because that will then help you to make a decision of when to get in and when to get more aggressive. For example, I'm not going to be as aggressive here as I am going to be here and here. Why? Because down here, all I can see is this momentum. Once the market has come back down and is testing, now I'm thinking, okay, well, if the market does manage to bounce, it's going to move up. And so, I've got more confidence. And then once it comes down again, now I've got the 3-bar reversal plus the little dipper and now a double bottom. In today's email, I talk about a trader who's absolutely famous in Chicago for going from literally nothing. I mean, he was I call him from the family butcher to a millionaire. I mean, he really was working in a meatpacking firm, and by the end of his first year, he had banked well over $1 million in profits, and it's because of these techniques. Listen, the number one job of a trader is to preserve capital, not to sit there whacking away at the market. I mean, look, if you're in this for the excitement, maybe you have a tendency towards gambling and you're getting that out of it, then that's all you're going to get out of it. But if you're looking for consistency, you're looking to make profits day in and day out, what I just went over is the key to unlocking those consistent types of profits. So if you haven't, check out the video that's in the email. I talk a little bit more about this in my installment in today's Forex Underground. As you can tell, I'm having a little bit of fun with that. Anyway, check it out. For tomorrow's session, focusing over here on the hourly, we've got another shelf forming here, another compression pattern. It's kind of sloppy though. And the reason why I say that is, whoops, I think I just made this yellow. We've got the upper level coming down here, the lower level coming down here, kind of. But in either case, we've got a small pennant or flag pattern, or triangle pattern forming up here. What that's going to give us is a long entry keying in on the high of this bar right here. That's coming in at 64.96. Beware though, we have a double top up here at 6,500. This is exactly where we were talking yesterday. Again, on the short side, I'm more comfortable with the short trade. We've got a low right here at 64.55. If you're waiting for the little dipper, you're going to want to watch for 64.49, meaning if the market breaks down, watch for it to come back up to the lows right here.